I am Kevin Matthews, top 100 financial advisor, two-time author, one-time bestseller, and we need to talk about generational wealth today. There is a tweet that has been circling my timeline a few times, so I want to break it down and discuss it in just a few moments. If you haven't already, make sure you go to buildingbread.com/2000. It will bring you to this page that you're looking at now. And I have a free guide that comes with a set of emails on how to teach your kids to be millionaires and what you need to do very, very easily to make your kids millionaires. And we're going to discuss just a tiny bit of that today based on these tweets. So before we get started, one, make sure you share this video. Click the share button. It is the easiest thing, and it's the best way that you can pay me for giving you all this free information. But go ahead and hit the share button. I'm going to do that on my phone and also check for any questions and comments, and also make sure the sound works and make sure you guys can hear and see and everything. If you can't hear me, let me know. Again, I'm testing out this new mic that a friend sent to me. So I'm checking. All right, so I don't hear any complaints about the sound, so we're going to go ahead and get started. Again, the link is right above or below the video, wherever you may be watching this. Make sure that you share the video and make sure you go to buildingbread.com/2000 to sign up for that freebie. All right, so let me pull this over. I'm going to bring up the whiteboard here. And there we go. Okay, so there's this tweet that has been going around. So I'm going to talk about the tweet, share my story, what I've seen as a financial advisor, someone who's managed hundreds of millions of dollars, and whether or not this is true. You can ask your local mortgage person as well. They may or may not have seen it depending on what area they may be in. All right, so when I was buying my house, it blew my mind when the lender asked if my family couldn't just gift me the down payment, saying that gifts/loans up of $50,000 to $100,000 weren't uncommon. Weren't uncommon from families of first-time home buyers. That is the 400-year head start we don't have. Now, let's go ahead and break this down piece by piece. So let me see. All right, got my marker working and everything. All right, so gifting, let's start there. Gifting and loans of $100,000 were uncommon. Now, no, I have not been in the mortgage space, but I am someone who has managed, again, hundreds of millions of dollars. So I've had, doctor clients that start start Roth IRAs for their kids the minute they can get a job. I have seen parents start their kids off with $20,000, $30,000, $40,000, $50,000 or more. That does happen. When I first became a financial advisor and they brought us to St. Louis to get trained. It's probably 30, 35 of us. Some were already married. And when we all went out to our different places, I went to New York, others went to Atlanta, North Carolina, California, so on and so forth. A lot of them who did not look like me immediately went to get a home. They said, "Hey, grandpa, left us $20,000 or gave us $20,000 so we can start a home." That's a bill I don't have to worry about. That was something that they had that people like me generally did not have. So that is generally true. And in fact, we have some stats to back that up. So if you go here and here. All right, so this is from you can see in the background, it's from Visual Capitalist, but the data comes from the U.S. Federal Reserve. And it shows, and I know my face is in the way, it shows the percentage of families and what they have by what we call asset class. So real estate, business, car, home, things of that nature. And as you can see, we'll go through each of these. Primary residence, 73% of white families have their wealth and have a home. I mean, their assets are made up of their home. 73% of them actually have a home, and 45% of African Americans have it. That's already a gap. As you can see, the average net average housing wealth is $216,000 for white families compared to $94,000 for black families. We also know that on average, black families' homes, same size, sometimes same area and same house, or house structure, is valued close to $80,000 less just for being in a black neighborhood or just being black in general. We have a harder time buying and selling homes, and sometimes when we do, we pay higher rates. That is true. Vehicles, I don't really consider an asset class, but you have it here. 90% of them own a car, only 73% of us. Again, it's a car. In terms of building wealth, no one really counts your car as an asset like that, but that's aside from that. Retirement accounts, very, very important. 60% of white families have a retirement account, only 34% of black families. This is a big issue. This is a big thing to pay attention to, because if you don't have a 401k, you don't have a 403b, or you're not using it, this is your biggest asset, because you can put in $19,000 per year in this account that can grow and compound for you over and over and over again. When you leave the job, you can roll it over and keep the money going. The fact that only 34% have it is a big reason why the wealth gap exists. Not the only reason, but it is a large one. Then we've got family-owned businesses, only 15% for them, 7% for us. That's a conversation for another day that we can get into. And then this is the one that I want to talk about here, is publicly traded stock. That is the stocks that we'll talk about today. So the Costco's, the Walmarts, the whatever, right? 61% of white families owned publicly traded stocks. Only half of us do. Half of us, meaning black folk, only about 31% own publicly traded stocks, which is, again, just stocks. This has been, for me, my mission to help us increase that percentage as high as possible. The reason why, number one, why I think this is the linchpin, this is one way to really narrow the gap. It won't close it, but it can narrow the gap, is because A, it doesn't cost me as much to own stocks as it did 20 or 30 years ago. You can get fractional shares. I told you guys about that. You can start investing with $50 a week or $10 a week if you wanted to go that low. You can start right now. It's flexible. You can get your money in and out if you need to. I don't need to get a $20,000 loan for a down payment to buy a home. I don't need extra insurance to buy a home. It doesn't mean that home ownership isn't good. It's just the bar is a lot higher. If you're in New York City and you're trying to buy a house, good luck. It's very, very expensive to do that. The stock market is not like that. Also, it's 100% transparent. If I buy a stock on a certain day and you buy a stock on a certain day, we're going to get the exact same price at the exact same time. So that's why I lean more towards the stock market. Obviously, I own a business, so I love that. I want to own real estate. I own some of that as well. So I'm not trying to demonize any other category. I just think if you want to start and you want to build wealth quickly and easily, I think publicly traded stocks, the stock market, as well as your retirement account, are the quickest and easiest ways to get there. Now, I want to address, though, how do you solve this issue? How do you solve this issue? Yes, reparations would be great. That if we could do that, perfect, right? But is it feasible? Are you going to wait another 400 years to get it? No. So I want to give you, I think I have, check my notes, I've got 5 ways that you can actually, with $100, have solved this issue. So if you have kids now, or if you're an investor and you're trying to invest now, you can build wealth with just $100 a month. I'm going to show you exactly how that works. All right, so we're going to scroll over to the side because this is a solvable issue. It's something I'm doing right now for my son today. All right, so we've got 5, put my notes here. We got 5 different investments that between 1992 and 2020, these are the results you would have gotten. All right, so we're going to start with VTSMX. This is called, if you're new to the channel, I don't know where you've been. Thanks for coming. Make sure you hit the share button. But also, these are called ticker symbols. So if you go to Yahoo Finance, if you go to your favorite investing apps and you type in VTSMX, this is going to pull up the Vanguard Total Stock Market Index Fund. If you're a new investor and you're trying to figure out where to start, this index fund is a very good place for you. It owns every stock, essentially. It owns every stock in the U.S. You don't need to do extra. All right. So it's always a good place to start. If you put in $100 per month, do this, 100 per month. And this is since 1992. And the reason I picked 1992, is that's as far back as this fund goes. I would have picked an even number, 1990, and just gave you an even 30 years. They'd let me do that because it started again in 1992. I'm trying to draw a straight line, you guys. I'm sorry. Should have also warned you that I'm not the best artist in the world. All right, so there we go. So if you put in just $100 per month, you started in 1992 and you didn't touch it, $100 every single month. That's $25 a week. Very affordable. If you got to pick up an extra hour, if you got to cut 1 yard a week, whatever it is something that is doable. $100 a month, every single month, automatic basis. You put it in, you don't look at it, you leave it alone, would be $163,626 today. So by the time that your kids are 28 or 28 years from now, however you want to frame that, you could have had way more than just a small down payment on a house from just $100 a month. I pay more in my cell phone bill than what this would be. That's why, like, we harp on, like, look, get fractional shares, like, put in a little bit. These little tiny amounts can make a big difference over time. It's also why time is so important. It's why I focus so much for investing for my son, because in 28 years, he can have over $160,000 just at 28 without him doing anything extra. If he were to put in $100 a month too, it doubles, right? Every single birthday, or if his grandparents want to put in $100 a month or even $50 a month, this starts to exponentially change. But again, starting as a kid, having 2 decades plus, almost 3 decades of a leeway and a lead, it's easy to do with just $100 a month. And this is just a plain, regular index fund, all right? And we talked about what index funds were the other day. Check this out. If you did Kroger, super basic, regular grocery store. You guys have heard me talk about it many a times, especially when the coronavirus is at its peak, and we'll see where that goes. $100 a month, every single month from 1992 to today would be $184,972. Depending on where you at, that is a side. I could buy a home in New York with that type of money, right? And again, you're putting it in there, you're not touching it, and you're consistently building. $25 a week, $100 a month. That's it. That's all it is. Super, super simple. And this is, again, why I'm such a huge advocate of investing in the stock market. And then check this out too. Over the last 28 years, we went through 9/11. We still went through the coronavirus. You went through the Great Recession. When you take that long-term view, you start to back up and relax a bit. Even through those things, even through Ebola, that happened too. Swine flu, that also happened in the last 28 years, right? Dot-com bust also happened during this time. I think I already mentioned the Great Recession. You still would have been very, very wealthy from just $100 a month. And that's it. So you could have afforded more than enough for a down payment, plus your student loans in many cases, right? By starting early and by being consistent, even with a small amount of money. All right, so we got our index fund, we've got Kroger, I've got 3 more. This is one I've been talking about for quite some time. This one is Costco. And feel free to type in whatever number that you think this is going to be. If you put in $100 a month, going all the way back to 1992, how much money do you think you would have today if you invested in simple, boring Costco, the warehouse grocery store, whatever it is you want to call it? So I'm going to pause. I'm going to let y'all type in the comments how much you think you'd have based on what we have here. I intentionally didn't put in Microsoft. I didn't put in Apple because we know that would have been, $6 million or something crazy. I'm talking about stuff that's easy, that's boring, that we all can get and understand. And again, you always want to take that long-term view because we went through a lot over the last 28 years. You don't always think about it. You don't always remember it, but you can still make money over the long term. All this day trading and trying to pick up penny stocks and all that like crazy stuff, you don't have to do that. You don't have to do that at all. I can sit here and look like, oh, Kroger's still alive. I'm okay, right? People are going to buy groceries. I'm going to be okay. I don't need to stress out and try to find the next big thing. This is normal. Like this right here. Let me circle this. This right here is the most basic, plain vanilla investment you got to have. Like if anybody told you like if you have a car, what's the most important thing you need? Like probably tires, right? You're not gonna go anywhere without tires. It doesn't matter if you have seatbelt or gas. If you don't have tires, you're not going anywhere. Basics, the absolute basics would have gotten you 163,000. Basics, right? The extra, which is the Kroger and the Costco, would have gotten you even more. So let's take a look. Let's see what the guesses are. $232,000, $200,000. We're getting anywhere between like the $200,000 range. All y'all are wrong. I mean, it's hard to guess, right? If you invest in a Costco, just $100 a month, $540,705. I'm upset because I wish my parents knew. I wish I could have invested in that because I would have been sitting on a nice chunk of change today. But again, that's $500,000 from only $100 a month on something that's boring and simple and easy to understand, right? I'm putting my money in Costco. That's it. Right. And there's no guarantee that these are going to, double and become $1 million in the next 20 years. We don't know, but they got a good track record. Right. And we know, especially the stock market in general, especially this investment, has a great track record going all the way back to the Great Depression, that time over time, usually the stock market goes up. And this is what we mean when we say that. Again, these are through the coronavirus, through the Great Recession, through the dot-com bust, through Ebola. The stock market tends to move up when you buy quality. So again, we went from 163,000, we went to 184,000, Costco $540,000. More than enough. More than enough for a down payment. More than enough for your student loans, more than enough for your grad degrees if you wanted to go back. Like, this is the power of investing with something that's simple and easy. You don't have to have millions of dollars, especially now. Now, back in the 90s, you probably did have to have a lot more money to start investing. Now you don't. One of my favorite investing apps, if you're on my email list, you're going to hear about this here pretty soon. It's public. I invested, $50, $60, and I own like, 6 or 7 stocks, easy. And every month I'm putting money in. Cash App, another easy one. You put money in every month, it'll invest the money for you. Simple. And I think for Cash App, I'm only putting in like $10 because I'm just testing out the app and just seeing how I like it. It's very, very easy nowadays. So this is your opportunity. Even if you're in your 40s, this is still your opportunity, because this was close to, this is 28 years. In 20 years, you're going to wish you started 20 years ago. So even if you just picked one of these, again, I'm leaning towards the index fund because it's the easiest, safest thing to get. Again, 20 years from now, you're where you started 20 years ago. And it may not be 163,000. Even if it's 50,000, it's more than what you have today for most of us, right? That's extra by starting early and investing consistently, not pulling out when the market does what you don't want it to do. Think about that, because the dot-com bust, I could have, if I pulled this money out and said, no, I don't want to invest during the dot-com bust. No, I don't want to invest in 2001. No, I don't want to invest in the Great Recession. All of these numbers would have dropped significantly. This is why you stay consistent, regardless of the noise, regardless of what's going on in the market. All right, I'm on a rant. I'm going to go back and give you the next few. All right, so, and then I'll take questions, so feel free to ask those as well. All right, so I think Costco was probably the biggest one out of these. So, you feel free to guess the rest of these if you wish, but it's not. I think Costco is probably the largest one. All right, so we're going to do Walmart and we're going to do Johnson & Johnson. Again, I purposely chose A, quality stocks, but B, stocks that are like, man, that are boring. That I think we all can at least relate to or understand. All right, so Walmart, $100 every single month from 1992 to today. Walmart would have made you $201,596. And then Johnson & Johnson would have made you $371,008. Such a weird number, but $371,000, I'll take it. I will take that. And asterisk here, Johnson & Johnson's actually from 1990. So this is the one stock that goes back a bit further. So just, throwing that out there. So, I mean, it's easy. So I understand and agree that for African Americans, for black folk, generally, no, we are not gifted that type of money. It's not fun, it's not fair. But investing in the stock market is one way to at least narrow the gap. It's not going to close it entirely. We still need policy to fix that. We still need better education. We still need equal pay, which we don't have, which is also on this chart as well. So we're going to have more money to invest. However, it can help alleviate some things. One of those things is getting a down payment, paying for college. Again, I'm investing every single month for my son so that when he's 18, 19, 20, 30, he can have some range of numbers in here, because even if I fail and I only get him $100,000, which is difficult to do when you're investing in stuff like this, that's $100,000 more at 18, 19, 20 than I had, right? I had to start when I was out of college and build my way up slowly, and still haven't hit that level because I got student loans. By doing this, hopefully college is free by then. But even if it isn't, guess who's paying for school? Costco's paying for school, right? Costco's paying for your house. I'm not paying for it. But that's the power of investing. And it's simple. Just $100 a month could have done this for you. You got 150, if you got 200, 300 more, you can multiply these. You can add an extra zero for an extra zero that you put in every single month. So what are our lessons here? Consistency is key, because you have to remember, and I know somebody's going to do this and just forget about it. There were terrible times between 1992 and now. All right. A lot of things it was not perfect. We had a bunch of elections, a bunch of hiccups. We had that recession. We went through the coronavirus. But if you stayed invested and you invested in quality, you were going to be okay. And investing can change your life. And if it doesn't change your life, it can change the lives of the next generation. So that's why I'm very passionate about the stock market. It's why I'm here every day. It's why I tell y'all to share this video, which you should, because there is a way, right? And this is not even with all the exotic, crazy strategies and all that other BS that's out there. Simple, easy, transparent, right? All right, so I'm gonna take a few minutes. I'm gonna answer some questions and read them. Hopefully I don't butcher the questions and names. All right, so let's see. Thank y'all for showing up. So I'm waving at people now because they shared. All right, have you used Cash App for fractional shares? I have. It is very simple. It is easy. One of my favorites. I think Public is a little further along just because I like that one a little bit more. But again, if you log into Cash App, you'll go on the bottom and it'll have payments and some other things. It's a little squiggly line there. You hit that, type in, KR or Costco or whatever stock that you're looking into, and you type in what dollar amount you can afford. So it'll have like $10, $25, whatever, and you can invest in it. There's even an option where it'll auto do it for you and pull out every 2 weeks, every week, whatever it is you want to do. So I have one. I don't have that much invested in Cash App. Most of my stuff is at Fidelity because I can do more. And I do like $10 a week in some stocks. So very easy if that's a place that you want to get started. Again, it's about the long term, and that's where you're going to start to see the difference. Costco was $12 back in 1992. Man, I wish I had grabbed Costco back in the day. What about target date funds? Great question. So target date funds they're a mix between something like VTSMX, and a bond fund. So what they do is, so they're good, especially for retirement accounts. They're good for people who don't want to have their hands on stuff. But essentially, they are very aggressive in the beginning, and they kind of become less aggressive the older that you get. So they kind of put you at the right, what they call target. So if I'm retiring in 2030, I need a 2030 target date fund. So I'm not going to have all my money in stocks when it's time to retire, because that's not what you want to do. So target date funds are generally very solid. You will normally find those in retirement accounts. I personally don't have any issues with it. But again, if you don't want to have your hands on it, you don't have to go through and pick stocks and do all that kind of stuff. A target date fund is very good for people who want to take their hands off. You will likely not see the exact same numbers, because by the time you get to work and start a target date fund, you're not going to have, 30 years in this case. However, if you're at work and you're investing in a 401k, you're probably putting in a whole lot more money than just $100 a month. So the numbers will actually probably be a little bit better. So I'll take that back. All right. Other questions. Can you invest in funds like VTSMX on apps like Robinhood? Great question. I don't have Robinhood, so I don't know. However, I can give you some alternatives. If you cannot find this fund, my wife opening the door. If you cannot invest in this fund particularly, there are some alternatives. Those alternatives would be, you can do VOO. Go out and, okay. You can do VOO, VTI, or SPY. Either of those three, they're going to get you close to the exact same performance. The only reason I didn't use those is because they don't go all the way back to 1992. I wanted to give you a longer time frame. I think some of those are like 2000s or so. So either one of those will get you very, very close to what we have here. Great place to start. They all do almost the exact same things. You should be able to get one of those in Robinhood. All right, so that's all the questions that I see. Glad you could hear me, because I was like, oh no, my internet crashed or something. All right, so I want to address one other thing before I sign off and see y'all tomorrow. So somebody asked me about investing in bikes yesterday, and I'm not perfect. I don't know everything out there in the stock market. The one thing I suggested was to see if Harley Davidson was a stock and if it was something you can invest in. And it is actually true. They are getting delisted though. So it might not want to be a place you want to invest in. Again, when I think bikes, I'm thinking like the regular bikes that you pedal on. And when I think about those, I think about going to Target and Walmart. That's just me. I'm not a bike expert. But if you by chance came across Harley Davidson, it's probably not a stock that you want to invest in, because again, they're getting delisted, which is essentially like snatching your jersey off and saying you can't play anymore. It's also happening to Hertz. It's probably not a place you want to be. I want to say probably happened to JCPenney's too, maybe. So yeah, if you get delisted, that's also not a place you want to be. So I don't know if bikes are a great place to invest unless unless there's something else out there, So I just want to throw that out there, like, hey, I did research it and it don't look good, at least for Harley. All right, so that is it for me. Thank y'all for coming out. I appreciate the shares. I am here every weekday, 10 p.m. Central, 9 p.m. Let's flip that. I'm here at 10 p.m. Eastern, 9 p.m. Central, and whatever times on these other coasts that I'm unaware of. So I will see y'all later. Thank you guys for coming out. I appreciate it. If you have any questions, feel free to type those in the comments. I'll be here. And happy investing. It is simple, easy. Don't let anxiety do your financial planning for you. Anxiety is not a great planner. I am though, and that's why I'm here to help you. Again, my name is Kevin Matthews II, top 100 financial advisor, 2-time author, 1-time bestseller, and I'll see y'all tomorrow. Bye.